Hi everyone. The market dumped today, and I didn't take the morning trade. I did take some trade on gold, but we pretty much got one opportunity in the morning and maybe another one in the afternoon on Nasdaq, and we got about two opportunities on gold today. I'll go over all of them, and I didn't take the morning trade, and maybe you shouldn't have either, but you could have. But this video could save you thousands of dollars because once I go over my reasoning, you'll see what I'm talking about. Because once you miss a trade, you kind of don't want to chase it. So if you're new here, I'm here to document my journey. I talk about a very simple concept called ICC, indication, correction, continuation. I didn't come up with it. Check out Trades by SI. And my entry model is very simple. It's called candle continuation theory, and we're going to go over it right now, actually. So let me go to bar replay. If bar replay decide to work, there we go. I love trading view when it's not working properly. There we go. So what is candle continuation theory? So this is where I woke up this morning. I saw this candle and this candle. I drew my hand in the line. So these are area of interest. So that's the area of the interest. You can mark more if you want to. So you might ask why I thought the market would go down. If you look at a higher time frame, we broke through this previous support indication. We had our correction and then we continued. And overnight and yesterday, we chopped around New York market and then we corrected a little bit more. So this is pretty much the end of the correction. Usually the Asian session and London session does the correction, and most often than not, the New York Open does the continuation, which creates another indication. So we are right here. 8 a.m. candle closes. We got these two area of interest, the point of interest. And we go down to 1 minute. Once we go down to 1 minute, once we close above this one, for simplicity, we get rid of that. So if we close above this line, we close below it. Since we haven't engulfed this candle, we wait. We wait to either engulf it or create another candle and then engulf that, or create an inverse fair value gap. Very simple. If you don't know about it, just join the community and there's a cheat sheet on there. I will link the community down below. So we are here, and then we went above it again. So now you get another opportunity. So if you flip this candle, if you engulf it, close below it, or with an inverse fair value gap, there is a fair value gap right here too. So this is where I am. It's pre-market. It's around 9 a.m. In my time, it's 8 a.m. I saw this and I was like, first of all, I was extremely tired. So I wasn't really thinking clearly. I was just making my tea. I was like, you know what? I'm just going to wait for the market to open up and then I'll get in. If you break through this line, come back and then go again. But sometimes the market gives you only one opportunity and that's it. You don't get any other opportunity. And of course, we missed the opportunity because by the time I was back at the chart, we were already here, and we were already making a small correction. I could have gotten in here, but the reason why I choose not to, because if you look at it now, look how big your stop loss compared to your target. So it's not even a 2R. So I choose not to take it. In the past, I would have taken it. I would have chased the trade, and the trade would come either hit me or it would go back, take me out of the stop loss, and then go hit my take profit. You get punched by the market in the face so many times that you learn to respect it, that you learn not to chase it and be disciplined. So here we go. Market opened. We already took this liquidity, and I'm like, okay, we already hit our objective. So I just have to either wait for it to close below it, correct itself, and then I'll get in. Or I'm just going to wait for it to see if we get a second opportunity. And guess what? We didn't get neither of them. The market just straight up dumped. And here's the thing. Some people say, well, you could have taken the trade here or here, here. It's easy to say that until you're on the live market and you're watching the price action. And any of these pullback, you're like, you might pull back here around here. You might draw your line somewhere around here. And you're like, you know what? I'm just going to wait for the price to slowly come back around this area and then I'll take my trade. Guess what? Like we're going up. I'm like, okay, we're going to go hit that and I'll take my trade. And then we just start consolidating and we never came back above this area or even got close to it. And of course, market just straight up dumped and then took our target for the day. And I was like, okay, I'm out of this trade. But you could have kind of take this next trade. Once we hit this, you just go back to 1 minute and you just wait for it to come back above here and then take another trade. The issue is same problem with the morning trade. Your target is very small, and second, the chance of the price coming and correcting deeper is way higher. So it's a way riskier trade. So that's why I choose not to. Like as soon as I saw the price hitting this level and we start consolidating, I was like, you know what? I'm done for the day on the Nasdaq. So that's the reason why I didn't take it. Because you get punched by the market so many times in the face that you learn to respect it. You learn to not to chase it. Could I have taken the trade here? Here or here? Yeah, I could have, but the issue is when you take the trade like this, first, the trade works, which is the bad part because you build a habit. It goes into your core memory. You're like, okay, well, next time if I see this, I will take it. And guess what? The next 10 times that you're going to take the same gambling mindset, it's not going to work just because it worked that one time. And that's how people blow a can. That's how I used to blow a can. I used to take a trade and it will work one day. And I'm like, you know what? It worked that other day. And every time the next day I would take the trade for next week or the next month, guess what? We come here, consolidate, and then hit the indication level, and then we will continue to dump. And same goes when we were going up. But when it's like a straight up dump, consolidation, and then continuation dump, in my opinion, there's no solid entry. You could have taken it, yes. This was a good entry because we had ICT people call them break of structure. We had a break of structure, correction, and then continuation, indication, correction, continuation. But we didn't get that correction here to continue, so be it. And that was Nasdaq. And this was an A++ setup, and it was my fault for not taking it. Like, look at this. Oops. This is beautiful. Just straight to our take profit. This is an insane amount too. It was like 400 point tick. Even with one micro contract, you would have made some good amount of money. Even with trailing your stop loss. Anyway, bygones are bygones. So let me show you the gold trade. So this is the gold trade. So let me just select the bar. So this is what I see. This is the 8 a.m. candle. We have we broke through multiple um, candle wicks. So this was one of them. Let me just make this one green since we are going up. And then we also broke through this candle. So I'm just gonna do this one as well. So these are your POI. These are your point of interest. And with the gold is kind of something similar. So it's like indication above this line, correction, continuation, correction, continuation. So we're looking for some sort of correction and then to continue. And with this strategy, since you're trading in hourly, you're not swing trading, you can trade indication leg, you can trade the correction leg, you can trade the continuation leg. It doesn't really matter. A lot of people were confused of like, well, which one I trade? If you're scalping or intraday trading, you can trade either leg, either the continuation, correction, or the indication. It doesn't really matter. As long as you see two consecutive candle or you see a massive rejection from a certain level, you can just get in. Very simple. And another thing you wanna pay attention is to is are we breaking through a certain level or are we stuck at a certain level? This is how kind of gold moves. Gold kind of gets stuck in these levels and then go up and then come back, use it as a support, go. So it's just sellers, buyers, sellers, buyers, sellers, buyers, kind of like playing ping pong. And if you have that higher time frame in the back of your head, you avoid taking a certain trade. And there's going to be an example later in the on the gold, and I'll show you why I didn't take that trade. It was on the Asian Open, so that way you can avoid taking those lost trade, because we have to have a clear indication from a certain level, and then you can say, okay, this is our direction. We have our indication, and then if it corrects, then I'll take my chances. But before, I don't. And I'm gonna show you an example after market open, so you kind of understand what's the difference between the two. And if it's too advanced, just stick to the two candle strategy and go from there. So we're here. You go down to 1 minute, and you set an alarm here. You set an alarm here. You just wait for the price to come back in one of these two areas. And the price go back, and there it is. So imagine your alarm hit here. So you either wait for the price to go below this line or close above it, create some sort of engulfing candle or inverse for value gap. It's very simple. So we haven't taken that one. So there you go. So we got close to this line, but we already inversed this line. There's no inverse for it, is there? Yeah. So there you go. So we close above the POI. We inverse this gap. This is the A plus setup. So you have two choice. You can either enter right away here or set a limit order on top of this wick. This is a trade that I missed. I didn't take. Market gave us a second opportunity and I took the second opportunity. But let's say if you want to have a better entry, when you see a little bit of consolidation, you can expect the price to come back around the same zone and then continue. So you can place your limit order, but if you're getting some sort of nice and clean V-shaped recovery, then in that case you kind of want to get in the trade right away. Those are my rule of thumbs. If you're a little bit choppy, I set a limit order. If it's a clean price action with a good order flow, then I just get in. I don't wait. So this would be your entry. So this is my limit order. I'm gonna see if we're gonna hit it. There you go. See? So we came back, we hit it, and as soon as you hit it, you just put your stop loss in this swing low, because this is our point of invalidation. And I don't trade based on a specific risk amount. Sometimes my risk is like literally like $30, and sometimes it's like $200. But I don't go over 200, especially if you trade like micro on a $1,500 drawdown account. Yeah, if I'm trading $100,000 prop firm, it's a different story. It's just for sake of simplicity and also showing people what they can do with a small account. I think that's why I chose to go with like a $25,000 challenge account. Oh, by the way, we recuperated some of the loss from the yesterday, so we are back on the winning streak. Yeah. So I'm gonna let this trade play out, and as far as the trade management goes, let's say we are somewhere around here. I'll move my stop loss a little bit above. Same thing. We are here. We just took this high again, and then I move my stop loss a little bit higher below this swing low. See, I'm constantly adjusting my stop loss depending on the price action. By the time we are here, we are way past the half point mark. So I'm gonna put my stop loss right above break even, right above this most recent swing low. See, that's why you give it room, because sometimes the market gets a little bit choppy before it hit the target. There you go. Very simple. Nice and clean. 1 to almost 3 risk to reward ratio. And I don't quite put my take profit right at the top or right at the low. I always put it a little bit above at some sort of like a psychological number. Like I put it, like, for example, on this one, I would have put it at 80 and we hit the 80. Just a little bit, every little bit on every trade helps out. Just a little bit of more detail. And I just wait. I just wait for the price to come back to those levels again. There we go. And then around here, my alert hit. My alert hit around this time, and I was like, you know what? Let me see if we're gonna close above it, or we're gonna go take out this POI and get in there. So pay attention here. The price closed above it, but since we didn't flip this inverse for value gap, I could have got in because we did flip this candle. But like since we didn't close above it, I just didn't felt comfortable. I was like, something's off. Like I'm gonna be a little bit more patient. And that just comes, the market intuition comes with looking at the price action every single day for so long that you just kind of start developing an eye for the market, developing an intuition for the market. And we start getting choppy. So I'm like, I'm glad I didn't get in, because I knew, I was like, we have a little bit more juice left to go take this low, because we didn't take it on this swing. There we go. We closed below it. We closed below it, and then I was doing something. I was busy. I didn't catch the trade right away. And then right here, this was a good entry. I saw this trade. And on this next couple of candles, I think I got in. Let me see if I can remember the candle that I got in. Yep, I got in this candle. I remember I was like, close above it, flip this area. And when you see all this downtrend, it's very scary. Your mind start to be very doubtful. I'm like, oh, what if it just continue to go down? But if you take this strategy long enough and you start seeing different setup, you start trusting it more and more. So I just got in. As soon as I saw this, I got in. I didn't set a limit order. I could have, probably should have set the limit order somewhere around here for a better stop loss, but I got in like right away. I put my stop loss right below this swing low. Put my take profit right here. And I did this one as my take profit 1 and this one as my take profit 2 and a little bit above it. So that was my those were my take profits. And as you can see, we did the same thing. We came down and balanced out this fair value gap. If I would have put my entry right here on top of this wick, because the CCT applies even on the 1 minute. So I could have just put my stop loss right here on top of this one or this one, doesn't really matter for a better entry. Like the games I'm sharing on this channel, people charge thousands of dollars for people to learn. It's just, it's too much free game, too much free sauce. So when you're around here, you just move your stop loss to swing low and then go down below. So I believe it around here, I'll move my stop loss to this swing low, and then and around here, since we were already over the 50% mark, I moved it right here, right above the break-even point. And then in here, I remember I moved it right here because I was like, we're about to hit this take profit 1. And I didn't take out one of the contract here. I should have, because I was like, we didn't close above it. We didn't take it in a good way. Once I saw this swing low, I just moved my stop loss. I was like, it looks like we're not gonna go take this. I was like, I don't want to be in this trade if it doesn't work out. And I moved my stop loss somewhere in here. And as soon as I saw this swing low, I was like, okay, this is my point of invalidation. I'm gonna move it right here. And we went up and up, but we failed to take it again. And we were out of this trade right there. So as you can see, came all the way down here. We completely failed to go take that one. I think we eventually end up taking that trade at the end of the day. I think that's what happened. Yeah, we only came to this target. We never went to take take profit. So that's why you have to be cautious around these trades. So let me see. That's 2. There we go. I think that this is a trade I didn't take after the market opened. So the candle closed. I drew my line here. Boom. So I was like, I'm gonna wait for the price to come back here and go here. But when I bank to 1 minute, if you go back to 1 minute or 5 minute, it's usually go back to 5 minute. When you see a zone like this, like a zone like this and a zone like this, like you see, this is a support zone. This is the area that we didn't take it out. We didn't take it out with confidence. Same issue with this area. Came above it, rejected. Came above it, rejected. Came to the same area, rejected. Went a little bit above it, but we didn't close like convincingly above it. We rejected. Same thing. This is the trade that we were in. We'd never hit. We barely hit this one. We didn't even take out this one. Went back, came back, went back, came back. So when you put your POI, when you draw your line, this is like one way to avoid bad trades. You see there's lots of rejection here, there's lots of rejection. The problem with taking this trade is you're right in the middle of it. You're not above it, you're not on top of it for rejection, and you're not below it for continuation or also rejection. That's the issue. So let's say on the hourly, you're like, oh, this is the candle continuation theory. Sorry about my telegram. So this is my strategy. Oh no, I see this. I'm gonna draw my line. I'm gonna draw this line. So when the price gets here, I'm gonna get back in the trade. So when I saw all of these choppiness and we were like right in the middle, you never want to take trade in the middle of choppiness because you are in between buyers and sellers. Why would you risk getting chopped? So let me see. So, see, we still didn't take these lows. Let me just use the 5 minute. So there it is. So yeah, the market never gave us another another opportunity. So we didn't take this low and we didn't came above it. So that's where we at. And that is why I didn't take any trade in that region. Hopefully that one was helpful. Same thing. Let's say you missed this one, you saw this one, came here. Look, same issue. We closed way above it, first of all. We closed way above it and then we closed below it. So you could have, they were like, oh, we closed below it, I'm gonna take it. But look, you're gonna get chopped because we are in the middle of this zone. There's no clear direction to the market. So hopefully that was helpful for everybody. Uh, One last thing, join the community. We started this community 3 days ago or 2 days ago. We already have 296 members, and I look at the statistic. We are ranked top 100 community in the school discovery groups on the self development, and this group started like 2 3 days ago, and this is everything I wanted to have. This is everything I needed to have when I started my trading journey, and I never really liked or enjoyed Discord or Telegram, because the issue with the Telegram and the Discord is you see a lot of like messages. There's always like 5 or 4 guys in there. Sorry about that are constantly sending just irrelevant like messages after messages, or like sending each other emojis left and right, and there's no like meaningful good conversation. That's the good thing about school community is I can just upload unlimited lessons on the classroom. I can go live. You can have different category for if you want to ask question. You can post your wins, your losses. You can post memes, affiliate links, and we just have a lot of good, solid engagement. And you can just DM anybody. You can just befriend everybody in the group, and you can just straight up DM them. And the members in the group, they can DM me. I got a lot of DMs past couple of days through the DM features. And I'm not really like a leader in here. I'm just part of the community. I just love to have it. I just love to help anybody that I can help with. Yeah, join the community, ask me question, and if you like this video, yeah, just give it a like, leave a comment, subscribe if you're new here, join the community. We would love to have you, and it's fun. It's a fun community. We are learning a lot. Yeah. So let me know. Let me know what y'all think. Oh, thank you for everybody who said I look like a movie star. with these glasses, the blue light blocking glasses. I'm putting these. I had this for a long time, but I don't use them as often as I should be, which I should at night because I'm on the chart. And using these help you sleep better. I've not been getting enough sleep lately. So yeah, that's it. Peace out, everybody. See you guys in the next one.